Good morning, good afternoon, good evening. I'm Ritesh Chan, a moderator of the panel, and I'm a founder of Infinite, Humanizing Credit and Credit Card Experience, and former COO at HSBC. And I'm also a member of G20 GPFI, and I have led global payment initiatives. Welcome to the first webinar of our Open for All series on Instant Payment Summit. Today, we are honored to have with us 6 leading experts in the field of instant payments who will be sharing their insights and experiences on setting the pace of instant payments beyond borders in Europe. It's a part of the 7th Annual Instant Payment Summit, sponsored by Finastra, ACI Worldwide, and FIS Global. Our speakers include Gan Mahil from FinTech Guys, Luca Vanini from Quad, Francis Deva from BNP Paribas, Imran Ali from KPMG, and Leo Bagner from FIS. They bring wealth of knowledge and experience from across the industry. So pleasure to have you here. And during this interactive panel discussion today, our speakers will be sharing latest trends, challenges, and opportunities in instant payments with a particular focus on cross-border payments in Europe. And they will also be sharing the perspective on how to unlock and unleash the potential of instant payments and how to overcome the barriers to adoption and usage. I encourage you to engage with our speakers by submitting your questions and comments through the chat function and to share your own experiences and insights on the topic. We believe that this discussion will provide valuable insights for anyone interested in instant payments, including banks, payments, merchants, regulators, and consumers. So without further ado, let's get started with our panel discussion on setting the pace of instant payments beyond borders in Europe. I would like you all to introduce yourself in 60 seconds, please. So Imran, would you like to go ahead first?
Hi, Ritesh. Yeah, happy to. Yeah, good morning to all the listeners out there. So my name is Imran. I'm a director within the payments consulting division at KPMG. I guess my background is 2 decades working in payments. I was the product lead on the implementation of faster payments in the UK back in 2008. Seems like a long time ago now. And I looked after real-time payment services at Citibank and at HSBC. And my current role involves working with banks, both in the UK and across Europe and globally, on the implementation of real-time payments, which of course includes SEPA Instant.
Thanks, Imran. Hi, Leo.
Hello, everyone. I'm Leo Wagner. I'm very happy to be here and to participate in this panel today with my colleagues from across the industry. I'm quite excited. I think we'll have some very interesting discussions. So I've been with FIS and in the payments industry for around 15 years now. I've always had a strong focus on payments. That's really been my bread and butter throughout my career. Initially as a product manager with FIS, I helped to define the company's SEPA and international payment solutions. And then I've gone on to a more consulting and advisory role, where today I help and advise our customers, banks, financial institutions, payment service providers, in implementing our solutions, and particularly our instant payment solutions. So I have quite a good view across different types of organizations, different types of banks, be they tier 1, tier 2, tier 3, large commercial banks, neobanks, etc.
Thanks, Leo. Hi, Francis.
Yeah, good morning or evening all. I'm Francis de Roek. I'm from BNP Paribas, working at the Global Cash Management, and I'm heading the industry engagement for payments. The Global Cash Management, that's where we do the products, the main products for the whole group of all the global products, such as, of course, the instant payments. I'm in the SEPA world, I think, since the beginning and even earlier, before the beginning, as I contributed to writing the Swift messages that were needed to make the SEPA messages. I was heading the SEPA rollout of the BNP Paribas group with a rather success today. I'm at the EPC scheme board, and I'm at a lot of interbanking relationships on behalf of the bank. And I'm involved at the TBA clearing, at the clearing houses, at the central bank. And I was even instrumental, I would say, in the new instant payments regulation, where we had a lot of discussions in bilateral with the Commission on writing some subjects.
Thanks, Francis. Hi again.
Hi, I'm Gian Marhill. I've been in the fintech business before it was even fintech. We didn't call it fintech 25 years ago. So I've worked for the main banks, Lloyds, Barclays, etc., in the UK, on their payment systems, launching, helped launch faster payments at Lloyds. And before that, I was doing the batch systems, BACS, CHAPS, and so on, as well as working with SWIFT on international payments. Lately, I've been working with new fintechs like 10x, who are operating in the open banking space and in the whole banking platform space. And also, last few years, I worked for MasterCard, and we launched open banking platform. I was a key person there, designing the way the products would work. And right now I'm doing ad hoc consultancy, a sort of point consultancy on payments, including open banking.
Thanks, Ken. Hi, Luca.
Hi, I'm Luca Vanini, principal at Quad Solutions. I am responsible for the consulting arm of Quad Solutions, which also provides IT services to fintechs and to banks. I'm in this job since a couple of years, and specifically dedicated in consulting fintechs and banks on how and also what can be the business case hidden behind instant payment, because instant payments eventually will need to cost as much as ordinary payments. So apparently there is no possibility to make money out of it. In reality, there is possibility if you do things in a different way. Before this experience at Quad Solution, I've been heading the global payment responsibility in UniCredit Group, covering the payment policy and payment product development for Germany, Austria, Italy, and Eastern Europe.
Thanks, Luca. So I would really like to start with the current state of play in the digital payments in European market. And what are the key trends that we are seeing? More or less, we all are aware of it, but I would really like you to lay a lens. Again, would you like to go ahead with and just describe what is the current state of play in the digital payments and the trends in the market?
I think despite sort of rumors to the contrary, I think we still got fragmentation within the European landscape. Each country, despite the EU regulations, are trying to harmonize instant payments and payments in general across Europe. Countries are slow to adapt to a common regulatory framework. It works in principle, but it's not the same as, for example, in the UK, where we know what the rules are and everybody lines up behind the rules. And if you don't play by the rules, you can't operate in the UK. In Europe, they're independent countries, and countries like Germany, for example, it's still fragmented a little bit, and there's friction between these payments, is what I'm trying to say. It's better than it was 5 years ago, or even 10 years ago, or even 5 years ago, but it could be a lot better.
Thanks, Ken. And Francis, I would really like to understand about, like, when Ken is talking about the different countries, different regulations, right? And there's quite a lot of fragmentation across the European market. So would you like to just throw some light on the latest EU regulations on payments, and especially the instant payments? Because that is the hot topic nowadays.
Yeah, thank you. Indeed, there is fragmentation, but don't exaggerate neither. Huh? All banks and PSPs that are connected to the instant payments have to be connected to the TIPS system, which is the instant payment, the same but run by the central bank. So everybody that is in instant is reachable anyway over TIPS already. Okay, it is not going perfectly everywhere, I must admit, but it works. And so we have already quite, and you see this from our bank perspective, already quite a lot of cross-border instant payments. This being said, indeed, the first rollout was country by country. That is true, but the systems are rather working equivalent. This being said, the European Commission says there is not enough reach, and that's one of the reasons for the new regulation. True and not true, in numbers of banks, of connected banks, it is true. There is, let's say, half of the banks are connected. In practice, in numbers of connected current accounts in the Eurozone, I think you have a reachability for over 90%, largely over 90% already. That is good. But there are indeed some smaller operators which don't directly have a use case to connect to instant payments. So this will change now and come to the instant regulation and this new payment regulation that is expected to be voted in October this year. We also the draft of October last year made by the Commission. There are 4 main points, and the first one is on reachability. Everybody that is present in the SEPA credit transfers need to be present in the instant payments. So we will have a full reachability. For the Eurozone, 6 months after this has been voted for the reception side, the receiving side, and 12 months later for the sending side as well. For the non-Euro countries, it is 30 and 36 months. They have a bit more time. This being said, the scope of the instant regulation is on Euro. So the non-Euro countries that have to be connected and have to join this instant regulation. So it is for their Euro part. So with the Euro currency, they will be reachable within 3 years. They will have full reachability. The 3 other parts of the instant regulation are on the IBAN name check. There will be a mandatory IBAN name check to be offered from the correction on the beneficiary side. So every payer have to upfront, before each and every single payment, have the possibility to see if this IBAN name check matches or not. You won't see the name in full, of course, at GDPR, but you will have a kind of a green, orange, and red status, and then it is up to the payer to decide if he wants to overrule yes or no. And then there will be a main changing on the sanction screening. This is really, really important. The sanction screening, there will be no more sanction screening transaction-based, but it will be client database screening. So every participant in the system, all the payers, all the payees, need to control their client database every day, and each time there is an update in real time. So if there is no listed person that can send and there is no more listed person that can receive payments, well, of course, then there can't be no more listed transactions.
Thank you, Francis. Everyone, what I gather from Francis that there's quite a lot happening across the regulations, right, in the European market of instant payments, or whether we talk about the SCT or the SEPA credit transfer, right? I would like to know from you about the lessons learned from the instant payments, right? And what are the trends that we are looking at, and how we can get benefit from those learnings?
Yeah, so it's interesting because as a global community, payments is moving, much more quickly towards real-time payments. So you have multiple countries now internationally who have domestic real-time payment schemes, and that's becoming more and more common now, so much more the norm. And of course, you've now got Europe, which is now embarking on its real-time payments journey as well. It's probably worth to maybe give some context. So, the SEPA credit transfer instant scheme launched in November 2017. And as of sort of 2019, volumes were about 5% of SEPA credit transfers. By about 2021, 2022, you're looking at about 14%. So not a huge amount of growth. And I think that's what's made sort of the regulators sort of stand up and think, hang on a minute, why is this not happening as quickly as we hoped? Or why are some of the benefits not being rolled out to customers? Mm-hmm. And that's why now, as Francis spoke about, some of the regulation is now being planned to actually mandate banks to send and receive real-time transactions. Mm-hmm. But we're not starting from a blank sheet of paper. We have real-time transactions already. So we have it in the UK, we have it in multiple countries across the world. And there are some really key, interesting lessons that we can learn. I think the first one is real-time payments doesn't work unless you have ubiquity. So you need all the banks connected, really, because you need full account coverage. And as a customer, you need that certainty that actually when I make this payment, it is actually going to get to the person that I'm trying to get to, within the time that I think it's going to happen in. So I think you need ubiquity, which is why I think it's a welcome move by the regulator to actually mandate the banks, because now it starts to give businesses and consumers a little bit more certainty. I think the second area probably is kind of how businesses can sort of benefit from real-time payments. So we've seen in a lot of countries kind of improve liquidity, so improve certainty around cash flow. And I think and we've seen further services being developed off the back of that, which help businesses and corporates leverage instant payments a lot more. So I think that's an area where I think, the European community can start to benefit a lot more in terms of cross-border instant payment transactions. And I think also one of the other areas I think we've seen as well, particularly in places like India, is actually instant payments becomes a very strong foundation to develop new value-added services. So if you develop the right kind of APIs or the right kind of technical integration opportunities, you can actually use instant payments to create a new ecosystem or a flourishing ecosystem where you start to develop innovation, new propositions, new types of players coming in. And that's what we've seen in places like India and various other countries around the world, and starting to see a lot more in the UK as well. And I think Europe is really, that's a really strong opportunity for the European community.
I couldn't agree more, Imran. And, when you're talking about, like, I've myself been involved into the global payment initiatives, whether it's a UPI to start with, or the P27 in Nordics, or instant payments in the UK, or Fed now in the US. So interesting that you mentioned about India, because as you are seeing, and as we all are saying, the UPI is taking over, and it is going beyond borders, right, in the global market. And as you rightly said, it's about the strong foundation. If you know about the SEPA, right, SEPA have been in its existence for ages. Now the challenge comes down to the fragmentation across the SCT, right? So Leo, I've got a question for you. And that's about, the SEPA instant credit transfer is a pan-European instant payments scheme, right? Which basically allow the real-time payments across the different bank accounts in different countries, right? Now, what are the challenges that we are seeing, or what is the rationale for this fragmentation across Europe? Would you like to throw some light on this?
Well, I think that the rationale for the fragmentation, if we look at the causality of it, it comes from, I think, essentially the regulator and their desire to, they kind of, they sit on the fence sometimes. So the regulator will define a certain regulation, which is very high level, but they always refuse to get into the details of how such things should be implemented. So we saw that with the SEPA regulation, we saw that with PSD2, and we're now seeing that with SCTNs. So the regulator will define kind of a framework for that. But then how that actually gets implemented will often be done on a country-by-country basis, community-by-community, and that does lead to a certain fragmentation. So this openness in wanting to be somewhat hands-off in terms of the regulation does inevitably lead to certain fragmentation. And we can see fragmentation in a lot of different areas related to instant payments in terms of the pricing of the instant payments, right? So different banks are going to price that differently. And in fact, the same bank may price instant payments differently for different types of customers or for different types of accounts. It might be free for retail accounts, but it might be a value-added service which is payable for corporate accounts or SME accounts, right? So there's fragmentation in terms of the pricing. There's fragmentation in terms of the usage of the instant payments. It's sometimes difficult to predict. So this is feedback I've heard from users of instant payments. It is difficult to predict when a bank is actually going to execute a payment as an instant payment. Some banks are going to try to maximize their usage of instant payments, and they're going to try to execute as many payments as possible through the instant rails. Some banks are going to expect customers to specify that they desire an instant payment in order for that instant payment to be executed. And even a payment that is going between two banks that are part of the scheme and that are reachable and interconnected through tips, etc., it can be difficult to predict if the payment is going to be executed as an instant payment or as a traditional SEPA payment. So the usage is fragmented. And then, of course, the implementation. Francis talked about that. I thought it was a good stat. I'd not heard that stat. About 90% of accounts, in fact, being reachable through instant payments. I think that's a very interesting stat. But there is, in effect, still some laggers in that space. And so I think it's a good idea to have that regulation, which is going to kind of enforce the use of instant payments and make it mandatory across all the payment service providers.
Leo, I completely agree with your view on the SCD and the challenges. Now, I really wonder whether it is obviously the infrastructure is a challenge, right? Regulatory and the compliances, the fragmentation across the different regions is a challenge, and the customer education, right? At the same time, technology, its infrastructure itself. But do you really think that any other digital payment methods, right, whether it's likes of mobile or likes of digital wallets or anything else, that is also challenging SCT or the SEPA credit transfer?
Absolutely. If you take an example, you take person-to-person payments. A lot of countries have their own person-to-person payment schemes, which in effect predate FTTNs. And while a lot of those schemes have made noise, and some have actually changed, they've changed from using traditional card rails to SEPA instant rails. So that's happened for certain domestic person-to-person payment schemes, but not all. So there is, in effect, an overlap between the use cases that can be supported by SCTNs and the use cases that are supported by more traditional cards. And so it kind of works both ways, right? The card rails are in effect a threat to the rollout of SCTNs, but that works the other way as well. SCTNs can be seen as a threat to the traditional card rails because SCTNs can provide a lot of benefits to the merchants, but also to the payers compared to traditional card schemes. So there's that overlap and a blurring of the lines between the different payment rails and payment methods, which I think is very interesting, albeit perhaps confusing to the end user.
Thank you, Leo. Hi, Luca. Luca, we are hearing about instant payments, the different regions, and we are talking about the challenges as well. But consider, hunky-dory, right? And how the financial institutions can unlock the full-scale network benefits of instant payments. I would really like to hear your views.
Well, the first thing to consider is that this regulation is eliminating some of the frictions that have slowed down the adoption of instant so far. So we can expect that with full reachability in Eurozone, and also with some solution of some issues in fraud management, thanks to the IBAN name check, and with the elimination of AML controls and the related false negatives, the usage of instant will grow rapidly. starting presumably from consumer and small business, more importantly, and then also followed by corporates will finally find all their banks offering bulk orders also for instant payment, which is clearly a prerequisite for a corporate. And that will certainly increase the speed of a migration away from ordinary payments into instant. And that, even that fact alone is already creating a benefit for financial institutions, because I can expect that most of them will stop or reduce investment on the ordinary SEP application and put all the investment and also the innovation in instant, which is by itself an advantage. Getting rid of all technology and moving to real time, to 24/7. Another maybe hidden effect, which is already available today, although smaller numbers, that instant payment have a remarkably lower cost in operations, because there is practically very little reason for an instant payment to be blocked or suspended, and there will be even less reasons after this regulation. All instant payments are by definition final, so there is also lower cost for a corporate sending payment, because they don't need to check whether the payment has been credited or not. And instant payment by design are fit for machine-to-machine payment and for programmable payments. And this opens a new universe of solutions. And yes, they can be also added value. Yes, they can also be priced, because the instant payment itself has to be free of charge or same cost as ordinary SEPA payment. But if you build up an overall service that does not exist today, yes, you can charge it. And also, yes, you can attract customers because you offer a certain service that competitors don't use it, because instant payment is going to be mandatory, but the added value services built on that will be a competitive area that will increase, recreate a little bit of differentiation among financial institutions.
Thanks, Luca. I really appreciate your views, but at the same time, coming from the global landscape and an advisor on the DPG and the DPI, which is the digital public infrastructure and digital public goods, what I truly believe that payment is a digital public good and it should be free. It should be free for the public. But let's take that some other time. Here we are talking about the instant payments are going to increase the volume, right? So the volumes are going to go mental. That means it comes with a lot of risk as well, and that is fraud. So, Imran, I would like to hear from you that what do you think that how it is going to play a role in terms of the fraud? Because the more volume, it means more fraud, right? So how that can be tackled in instant payments?
Yeah, so it's unfortunately it's a real problem when it comes to instant payments. So we have all the benefits of what Lucas just talked about, and what some of the other panelists have mentioned around the benefits, but the downside is faster payment. Instant payments often means instant fraud, and we've seen that in countries that have real-time payments currently. So particularly in the UK, we've seen authorized push payment or APP scams increasing year on year as people criminals take advantage of the fact that you can sort of fool somebody into sending money, and then when it's sent in real time, that money can then be taken out of the beneficiary account straight away, and the money's gone, and it becomes harder to recover. I think it's hard to get data on how much fraud is taking place on SEPA Instant. Given the low volumes, it's probably relatively low. But I did manage to dig out one sort of stat around fraud, which is, for some reason, France came up. I don't know why. Nothing against the French. And it's relatively low. I mean, you're talking about 0.4% of transactions, of SEPA Instant transactions, fraud takes place on those. But if you compare it to SEPA credit transfers, which is 0.001%, 0.0019%, so very low. It shows that actually there's a stark contrast. And if you start to multiply volumes, as you said, Ritesh, that fraud number goes up and starts to become really significant. And so this is something that really has to be looked upon by the regulator and by the European community and by the banks. Now, I know recently the EBA announced that it's going to be launching, producing some sort of fraud detection and management capabilities on RT1, which is a good move. But I think the banks have to invest some time and effort in terms of looking at fraud detection capabilities specific to real-time payments. So how do you detect fraud much quicker, much faster, and stop it from taking place? But also, I think one lesson that we've learned in the UK is around customer education as well. We no longer have the luxury of payments taking a few days. So if something goes wrong, you can kind of stop that payment. You now have to really roll out a customer education program that helps customers understand, if they do make a payment that is fraudulent, it's going to be gone pretty quickly. So they need to take extra caution. And what we've seen, in the UK, for example, is services such as confirmation of payee, where the payer is asked really to confirm the account number and the details and the name, and then there's a check done if the account matches those details, and if it doesn't, that the payer is given a warning, say details don't match. Do you want to go away and check, or do you want to carry on? I think something similar like that needs to be thought about across Europe as well, just to add a little bit of friction into the process, just to make sure consumers are protected. The other thing also that we really need to think about seriously is what does happen when fraud does take place. How is the customer protected? So if I make a transaction by card, I have a raft of protections that that happen if I don't get the services, if it was a fraudster, et cetera. I've got a pretty good chance of getting my money back. Account to account payments traditionally don't have those types of protections. So I think we need to start really thinking about how we introduce some of those protections for customers if a fraudulent transaction takes place. Who has the liability? Who is responsible for paying the customer back? And how is that divided amongst the banks? We're having that debate right now in the UK. I think that debate probably needs to take place across Europe as well, because it takes a little while to agree those boundaries as well. But I think some of those protections are very important, and I think it is important because you have to build confidence in the system. People will only use the system once they know it works. There's some certainty, but also they know that their money is safe and they are protected. And if you don't have those things, customers lose confidence in the system and they won't use it.
I agree, Imran, but at the same time, we can't offer on the real-time payments or the instant payments, we can't offer security like Section 75 on the credit cards, right? So that is going to be a challenge as well. So I completely understand and agree the argument, right? But it's going to be difficult that where the ball sits, who is accountable for that, right?
Well, you're absolutely right, Ritesh. And it always comes down to cost, right? The more protections you build in, the more it costs. The infrastructure costs, the more it costs banks. And as per your last statement, you expect all payments to be free. Who's gonna pay for it, right? So it always comes down to that. But I mean, I think the balance you have to reach is, how much do you want to protect customers and give them confidence, versus keeping a low-cost infrastructure, and that's a very careful balance. But I think that is one that you have to think about.
Thanks,
Imran. I think you hit the nail on the head, Imran. With faster payments, instant payments, criminals are able to transfer your money through several accounts within minutes, and the authorities and you have no chance of getting it back. So, checks and balances need to be placed into the system, and perhaps we need to slow it down a little. Are instant payments really needed? Do you really need sub-second transfer between account A and account B? We need time buffers built into the system to slow it down a bit, so that if someone isn't sure that they've made the right amount of payment or has gone to the right account, it can be stopped. Somewhere, someone can pull the money back. At the moment in the UK, we don't have that ability. And we've had faster payments for what, 15, 20 years? And we're only now seeing the scale of the problems. And if you lose your money in the UK and you've used faster payments, you've got virtually no chance, depending on the bank you use, you've got virtually no chance of getting that money back because it's gone. You know, it could be anywhere within a minute. So I think Europe needs to think about that.
I couldn't agree more again on that. And I was just coming to you in terms of the fraud as well. All right. In terms of the fraud, if I go back in my own history about building up the real-time scoring platform for Visa in 2010, right, and which we used to call as the RTS, the real-time scoring. At that point of time, now we are 13 years ahead, right? So obviously the real-time scoring is much more dynamic, as well as we have got behavioral, we have got a variety of the technologies and the methods for fraud detection and prevention, right? Would you like to throw some more light onto how we can prevent frauds?
If I could, I wouldn't be sitting here. I'd be a very rich person. I can share some ideas with you. I think Imran hit the nail on the head. I think education, customer education, banks don't do enough to educate their customers. I mean, I bank with one of the major banks, and only now they're starting to educate us as their customer, because they know if we get defrauded, worst case, then they might have to pay the money out of from their balance sheet. Otherwise, it's just, if I can't prove that it wasn't my fault, I lose the money, that's it, game over. So we need to incentivize, or the banks need to be incentivized to educate their customers. No one anywhere is teaching, training, educating customers on how to use faster payments, instant payments properly, and how to be aware of the risks. Customers don't realize the risks. And the criminals are far more sophisticated than the industry, I feel. You know, they're working on this day in, day out, 24/7, and there are hundreds and thousands of them. And they're, you know, we've all seen these scams operating. We've got units of people in all over the world focusing on just scamming people and thinking of more and more sophisticated scams to get money out of people, and they're succeeding. You know, unfortunately, I have to report they are winning the game at the moment, and we are losing. So, dare I suggest, I think slowing payments down a little might not be a bad idea. Maybe we ought to ask ourselves, why do we need instant payments? You know, why is the question. Maybe that's something the industry needs to ask. We're in the game of chasing it, making it faster and faster. We've got to the point where we can make faster payments now, but we haven't thought about the risks, and we haven't done enough to counter the risks and dangers of faster payments. In the old days, if you wrote a check, you had, I don't know, 3 weeks to kind of think, oh, was that right? And you could cancel the check. Now that's gone.
Then I completely agree with you, but at the same time, let's be realistic, right? These are customer driven. So once you're used to with something better, you're not going to go back, right? So unfortunately, that's where we are, right?
I would like to react on that one.
I was leading the tokenization for Visa, and I can tell you about the volumes before Apple Pay, or before tokenization and after tokenization. It's a different story altogether, right? When I look into the volumes 2010, 2011, 13, or up to 16, right? 80 million transactions a day. In Europe, we used to be like, oh, pretty good. Today, that's nothing.
Yeah.
That's negligible. So
no, again, I agree. So I think educating customers, we haven't done that as an industry. We haven't done it enough.
I completely agree. But on that note, it is not only the educating customer about the real-time payments or the faster payments or the instant payments, but if I can throw some light on the customer education, the financial literacy in the country, that is really, really low.
Sorry, say that again?
The financial literacy overall, I'm not talking about just the instant payments, the financial literacy itself is very low. If I can just throw a number with my own research, which we have spent significant amount of money as well, 78% people in the country, 78% people in the country, they don't know when they make a minimum payment on the credit card, they incur higher interest rates.
Yeah.
And that's a basic. So we really need to educate our customers, and that responsibility is not only on the financial institutions, but at the regulators as well. So regulators need to have financial institutions and the other bodies accountable for that.
Yeah. The analogy I like to draw is with driving a car. You know, people have to go through a whole course and then pass a test before we allow them to drive a car and let them loose on the street. With a faster payment, with instant payment bank account, bang, you got it straight away. The bank gives you authorization, and you can have your money cleared out by someone else in an instant.
Thanks, Jan.
The driving of the car. Driving
Sorry?
of the car is an interesting analogy, because now we're going towards self-driving cars. So
Right.
technology and things like AI and machine learning, I think, have a large part to play in fraud detection in the future, and making fraud detection much smarter and avoiding false positives. So I think AI and machine learning, you know, will play a part in that.
Leo, but
Yeah,
at the same time, that is still a system, right? We have seen that what happened after COVID, right? And during COVID, when the customer behavior changed significantly, what happened with the false positive and negative after COVID and during COVID, we all know that. So it is also going to be a challenging part, right? Leo, I was just coming back to you on something else, right? Because, you know, in the European market, we see there's quite a significant challenge as well as the impact of the one leg out, right? And what is the impact on the European transaction banking landscape? And just for the audience, the one leg out, it means at least the one leg of the transaction is domiciled outside Europe.
So I think one leg out is a really interesting point, and I think it's going to be something that is going to drive a lot of volume on the SCT instant scheme. So a US bank, for example, that's initiating a payment in euros, traditionally that goes through standard correspondent banking with a local clearing leg, typically through Target 2 or Euro 1. With the one leg out regulation, the local clearing leg will be possible for that local clearing leg either to be a SEPA classic payment or an SCT payment, right? So there will be motivation for large banks to clear those payments through the instant rails, and that's going to drive volume. And so you associate that with something like Swift's DPI Instant initiative, which the two really go hand in hand. And so that's going to provide customers with much better visibility on the execution of their payments, and obviously much better service levels. The challenges are going to be for the large transaction banks that do a lot of the Eurozone clearing of these one leg out payments. So these banks are going to have to make significant changes to their current systems, because typically they will have siloed applications, their international payment applications on the one hand, their SCT payments applications on the other hand, and those two silos don't typically have a bridge built between them. So the large transaction banks are going to have to either develop a bridge between those two worlds, the international payment correspondent banking world and the instant payment world, or they're going to have to go for a much bigger full-scale implementation of a holistic payments hub that is able to handle all different types of payments. And I think that's one of the things, an aspirational thing that a lot of banks can look to as a future objective for themselves. So there's going to be a lot of threat from the banks that get this right.
Thanks, Leo. So what we really need is the very effective and efficient cross-border payments, right? And probably that will improve the situation and handle the situation up to a certain extent.
Yeah,
So,
I would like to react on this last one. Indeed, I'm closely involved in the one layout at EPC perspective, and we are also part of the IXB initiative to make indeed those payments between euro and dollars instant, between the connection between EBA clearing and the clearinghouse in the US. But it is less evident as it looks like. It is not because you have a data format, a message format, that a thing is done. And there it comes. You have to interconnect by one way or another the different types or schemes of instant payments. And look to the instant payment scheme in the US, the clearinghouse, TCH. It is completely different what they run with the instant payment we have here in Europe in euros. Finality is different. For us, for Europe, just as an example, in a screening example, if it is a positive, false positive mostly, it is stop, it is a reject. There is no parking, no buffer. It is a yes or a no. Look to the US system. Well, they can buffer it and they say, well, I will handle this listed or false positive, this positive, this hit, let's say it. And they have, without any time limit, they can take months if they would like to do so. They don't do this, of course. But so the schemes are different. And you don't need to go to outside Europe necessarily. Look to the TIPS initiative, where they are trying to set up a connection with the Swedish krona, together with the Riksbank, the central bank and the Riksbank, doing this. Just within Europe, the scheme of Sweden is different than the scheme we run here in euros. We have a pre-fund. It is they don't have pre-fund. They do the settlement differently. So it is not because you have an efficient message in between that the thing is done. Of course, you need this message as well. That's fully sure. But there is still so much, a lot of work to be done beside this message. Messages, there's only a mapping issue. And it's nice, there is one, and there is a standard, and there's an ISO standard, and even an EPC governance. That's all good. But that's just mapping. I can map it in the message if you would like. But I have to have the behavior from the other side in the process that need to be exactly the same as the one I have. Or matched or agreed. And that's the whole complicated thing. And so if we have to do this in dollar, fine. We have a governance that to do this in the dollar side. If we want one in Swedish krona, we have another one. And for each currency, for each thing in the world, we need another governance rule on top of this. And that's the complicated part.
Thanks, Francis. So I was just coming on to the cross-border payments, because we are talking about the one leg, we are talking about SEPA, we are talking about the SEPA instant credits. So again, what is the future of the cross-border payments? What do you think?
Depends what you mean. International payments, cross-border payments within Europe or outside of Europe?
I'm talking about the overall. So let's start with the Europe. So Europe, we are talking about the SCT, right? We are talking about the different schemes around Europe as well. That has got its own challenges. But if we look into it from the global perspective, if you have a crystal ball, right? And if you have to look into the cross-border payments, what is your view?
I think cross-border payments are going to, well, in the future, someday if I had a crystal ball, there will be little difference between cross-border payments and local payments. They will become instant as well. I think that's in the future. I would see that. You would notice very little difference between making a domestic payment or making a cross-border payment from the UK to Europe or anywhere in the world. At the moment, there's a lot of friction. The charges are higher if I want to make a payment into Europe or to the States. In the future, it will be seamless and possibly at the same cost, fingers crossed. And the costs will come down as more and more competitors enter the field. Also, the new players will come into enabling those payments. So people like Google and Apple will play a bigger role in making those payments, because that's how they will, I think, find their entry into the marketplace and find their place in the whole ecosystem, and Microsoft, and not to forget Microsoft as well. So I think it's challenging for present incumbents like Swift, MasterCard, Visa. There are new players coming in and with new innovation, and it's a challenge for these guys. But they're doing playing a good game at the moment. But it's a challenge as global players come into the game.
Thanks, Ken. What I do and I do not agree completely. I do agree with your point, but at the same time, when we look into the big techs, right, they have been there in the market. Yes, definitely we can talk about Apple coming up with the buy now, pay later, right? And but especially when we talk about the cross-border payment, there's quite a lot of infrastructure requirement, right? Imran, I would like to get your views on the cross-border payments. If you have a crystal ball, and if you need to draw that picture, that what it looks like.
Yeah, so I think at the start I said we're increasingly as a global community moving towards real-time payments. So I think cross-border real-time payments is going to become more and more prevalent. So the Bank of International Settlements recently did a bit of a test between Italy, Malaysia, and Singapore, where they did mobile instant payments and very successfully so. And as part of the next phase, they're going to be expanding that to further countries. So really bringing the benefits of real-time cross-border payments to customers at the ease of being able to type into your mobile phone. So I think what's going to happen is probably sort of three areas. I think one is customer expectations are going to increase, right? So they can make real-time payments domestically. Increasingly, they can make them across borders. So actually every payment interaction that they have, they're going to expect to be in real time, irrespective of borders or not. So I think customer expectations are going to move significantly in that direction. And I think, as a community and as infrastructure providers, we're going to have to keep up with that. Secondly, I think banks will be forced to become more efficient, right, in terms of processing those transactions. So if you look at SEPA when it originally launched, one of the key criteria around SEPA was that the cost of a cross-border transaction should be the same as the cost of a domestic transaction. And that forced banks to really evaluate the cost of processing those transactions. And we got, different clearinghouses came up and a much more efficient way of processing those transactions. So I think as we move to real time across borders, banks are going to have to look at actually how are they processing those transactions, where are the opportunities to automate, be more efficient. Go on, Ritesh.
Thanks, Imran. No, that's a very good point. I was just about to, because as you mentioned about the payment infrastructure and maintenance cost, right? And I would really like to get Leo's view as well on that in terms of, because Leo comes from the FIS and FIS wants the payment as a service, right? And that's where we are seeing quite a lot of movement in that space. So Leo, what's your view on that in terms of the cost associated with maintaining payment infrastructure and the instant payments and the real-time payments, as well as the role of the payment service providers or the infrastructure service providers?
Yeah, so thanks for that. I think payments as a service is the main point is that it makes life easier for banks, for payment service providers. They don't have to worry about running the infrastructure, keeping it up to date with new versions of rule books and regulations and all of that. So it takes that hassle away from them and frees them up to focus on their core business. And as the payment landscape evolves from fragmented domestic infrastructures towards the Holy Grail, which is going to be a more interconnected global network of instant payment rails, as that evolution happens, then parties that provide cloud-based software as a service solutions are going to be able to shield banks from a lot of that complexity, because there is going to be a lot of complexity, both in terms of the regulation, but also the technology and the messaging, etc. So that holy grail of a world of interconnected instant payment networks, because as Imran very rightfully said, customer expectation is that payments should be instant, whether they're domestic or cross-border. There is no excuse today in a world of modern technology for a cross-border payment to take 3 days, right? That simply does not sit right with millennials and customers like that, right? And so the question is, what is going to happen? Are we going to go to a set of interconnected networks, or is a handful of global players, the very, very large global transaction banks, are they going to set up their own internal networks, which are going to provide the ability to clear payments and execute payments instantly across the globe between currency zones, etc. So is it going? Who is going to come out on top on that? And so I think it's a very, very exciting time to be in this industry, and I'm very happy to have a front row seat to be able to witness that and play an active part in that.
Thanks, Leo. Luca, what's your view on in terms of, we are seeing there are new fintechs which are coming up, which are taking over the role of banks up to a certain extent. Why banks are not able to fight that battle? So in terms of, if we say cross-border payments, a few names comes automatically in the mind, Wise for that matter, or Zero, or multiple other payment platform, right? From the customer's perspective, or even from the corporates or the business payments, why banks are not getting into that space? Because even at some sector, I've seen the banks are partnering with these fintechs as well. So could you please throw some light that where are the challenges apart from the culture?
Well, culture is a major one to start with, but to a certain extent is a matter of profitability doping. So in order to prepare and deliver a reliable and credible alternative to payment fintechs, you need to be sufficiently big. But if you are sufficiently big, almost always you make a reasonable amount of money from existing correspondent banking. And the money you make today, because there is no regulation preventing you from doing the way you do, is much more on a business case basis of what you can make by competing with fintechs that make large volumes, but more or less with reasonably low profitability. So as long as large banks can do payments the way they do today, they have no big incentive in getting to a lower margin business. So it's a kind of trap at the moment. It's only regulation changing the rules would all of a sudden put banks and fintechs on the same level playing field and create opportunity to innovate all together, to connect, to find solutions. Because at the end, the same banks that enabled so efficient and cheap domestic payments are the same one who are still maintaining an old-fashioned cross-border payment system. So the problem is not the banks. The problem is that in one area, regulation forced competition, in the other area, it didn't. And it is difficult to get out of this trap at the moment.
Thanks, Lika. Now my last question to everybody, and I would like your view in a one-liner, if you don't mind. SEPA, we have seen for the ages, global payment ecosystem has evolved quite significantly. And as I said, I keep shuttling between the global locations. So today I'm sitting in Mumbai while I'm talking to you, and I see the UPI because I've been involved with the UPI from early days. Have we learned enough from the global payment infrastructure space? Imran.
A little, but more to come.
Thank you. Ken.
No, we haven't, I would say. We haven't learned enough. There's a lot more to learn. And that's a good thing.
Francis.
You're on mute.
You're on mute.
sorry, we are in an evolving business. Everything is going faster, more predictable, more transparent, and then there's always ways to improve. And we have already improved quite a lot, but there's still to improve. But there are still benefits to grab as well for the banks, but as well for the corporate. And they can still reuse a lot of things that they are not exploited for today.
Thanks, Francis. Hi, Leo.
Well, I'll conclude with 3 words, I think. Innovation, standardization, and globalization. Those are the 3 trends.
Thanks, Leo. Luca?
I add also that there is a big room for improvement if regional areas start to look at each other more than they do today. So Europe should look more to what is happening elsewhere, especially in Asia.
Thank you, Luca. It's such a pleasure to be here. And thank you very much for your insights and input. And I'm sure the audience must have enjoyed it quite a bit as well. So thank you very much and have a great day.
Thank you.
Thank you.
Thank you.
Thank you. Bye.